when you look at since the peak in volatility in March, we've been in a robust stretch of primary issuance, both in the high grade and the high yield market. The record-setting pace in the high grade market in U.S., we've had almost 875 billion of issuance. That's 80% above last year's level. We're going to expect to be at 100 trillion by the end of the month of May. That will be in line with all of 2019, and we'll be flirting with an all-time record as the year progresses. Look at Europe. There's been 330 billion of high-grade issuance. That's up 40%. We had a record month in April. That we're at 40 billion already in the first 12 days of May, so we're on track for potentially another record month here. When you look at the high yield market, it is a robust picture in the U.S. As you said, there's been 135 billion of issuance. That's up 50%. Notably, 50% of the activity has come post March 23rd in the volatility. Europe has had less than 3 billion of issuance. I think this is more about the mindset of issuers. In the U.S., it's definitely a mindset of capital markets first when they think about liquidity, banks second. In Europe, the mentality is more, hey, banks first, then I'll think about the capital markets. Having said that, we are seeing record issuance in the high grade market.
Kevin, I'm curious, we've got a lot of companies out there that clearly need the cash right now, but other companies that think they're resilient and don't necessarily need more debt, but they are taking on more just in case there happens to be a prolonged crisis that they haven't accounted for. Just say we do get a V-shape in some sectors and companies are sitting on more cash than they require. What happens to that? Do they pay down the debt early, or do they use the capital they've raised for other purposes?
It could be all of the above. I mean, there's definitely the key to this crisis is, right, we don't know the depth or duration of this economic recession. So the mindset of any management team has been the 3 L's of liquidity, liquidity, liquidity. So let's start piling that. If they have to go back and pay off debt early and there's penalties for it, that's a cheap insurance premium given the economic storm we're in. So we may see some of that of just paying back. We may see some of that spur M&A activity down the road. It may be an opportunity of growth coming out of the recession. I think it's going to be all of the above, but right now it is all about conserving cash and stockpiling as much as possible, and it's a safe insurance premium right now.